Welcome to our deep dive into Core & Main Inc., ticker CNM, a leading distributor in water, wastewater, and infrastructure solutions. Could its stock hit $1,000? Let's break down its financials, pros, cons, and long-term potential, including comparisons with competitors and market indices. Core & Main is a powerhouse in infrastructure, serving municipalities, contractors, and private water companies across the U.S., with 320 locations. In 2023, it reported $6.7 billion in net sales and $910 million in adjusted EBITDA, showcasing robust financial health. Its meter initiative grew 48% in Q2 2024, and strategic acquisitions like HM Pipe Products opened new markets in Canada. Strong cash flow, $1.1 billion in 2023, fuels growth and share buybacks, making it a compelling investment. Core & Main's adjusted EBITDA margin was 13.6% in 2023, down slightly from 14.1% in 2022 due to rising SCADA costs. Net profit margin sits at 7.9%. Its net debt is $2.4 billion, with a debt-to-EBITDA ratio of 2.7x, up from 2.1x, driven by acquisitions and buybacks. However, $1.1 billion in operating cash flow in 2023 shows it can manage its debt comfortably. Pros: market leadership, diversified revenue streams, and strong cash flow. Cons: rising debt, no dividend payments, and exposure to market volatility. The lack of dividends may deter income-focused investors, but its growth strategy appeals to those seeking capital appreciation. Since its 2021 IPO at $20, Core & Main stock has climbed to around $50, delivering a 150% return, outperforming the S&P 500's 80 to 100% over the same period. Looking to 2030, continued acquisitions and infrastructure demand could drive growth. By 2040 to 2050, digitalization and sustainability investments may play a bigger role. However, reaching $1,000 seems ambitious without exponential growth. U.S. infrastructure bills boost demand, but regulatory changes or labor shortages could hurt margins. Compared to competitors like Ferguson plc, Core & Main's higher debt-to-EBITDA ratio, 2.7x versus 1.5x, is a concern, but its growth initiatives give it an edge. It doesn't pay dividends, unlike some peers, so it's not a dividend aristocrat. Core & Main offers strong growth potential for long-term investors, but $1,000 is a stretch without major catalysts. Short-term volatility is a risk, but its infrastructure focus and cash flow make it a solid pick. Subscribe for more stock analyses and let us know your thoughts in the comments.